I've got a special presentation for you today on the mindset for consistent profits. We're going to be taking a look at 3 different phases involved in kind of your day-to-day trading and look at some of the more common thoughts that I experience, at least working with traders and coaching, and then kind of the ones that we need to correct in order to be more consistent. Okay, so that's what we want to focus on here. Okay, and so I'm kind of assuming you're good at reading charts. You have somewhat of a game plan already, right? And so we're actually going to be taking a look at snippets from my trading plan. All right, if you don't have a trading plan or still working on it, okay, that's the very beginning part of the turnaround formula program. All right, in the web address that you see, t3live.com/formula. It's the very beginning part of the course before we get into looking at the strategies, looking at entry patterns, looking at ways to manage. Okay, so we won't be necessarily getting into those strategies, but more talking about kind of how we think when we're preparing for the day, when we're executing our strategies, when we're executing the entry patterns, right? And then once we're in a trade, okay? So I'll be highlighting some different kind of common things that I hear from other traders and then kind of how I try to think of it, all right? And so, especially if you're in the room with me, you'll hear a lot of this stuff, right? Especially the stuff that, I say is going on in my head. You'll hear me just say it on the mic day in and day out. So let's take a look at it, okay? All right, so starting with the first phase, planning, okay? Planning and preparation, all right? And so when I first start, on the very first session I get with a trader who's starting coaching with me, we do an assessment, okay? I have them fill out a questionnaire, and I'll ask them kind of what are your primary strategies for trading in whatever markets that you're trading, okay? And so these are kind of the common answers that I get. Right, and so there'll be something along these lines. I will buy oversold stocks and sell overbought stocks. Okay, that when I see that is a big red flag for me, especially if your oversold, your overbought is not well defined. Okay, I don't like those terms. That you won't hear me use them in the room, because in a way, oversold is saying that the market is wrong at the price that it's at. It's also inferring that a correction will come. And I think that kind of assumption can be a little bit dangerous. Okay, but if you have those terms well defined, you know when your execution point is, okay, I don't have a problem with you using those terms. Okay, I will play bullish stocks long and short bearish stocks, right? Things like that. Or I will buy them at support, sell them at resistance. These are very, very general, okay, and very also incomplete. Okay, now in the last one, I will trade pro gaps in the direction of the gap, fade novice gaps. We're getting there. Okay, we're starting to get to more specificity, more kind of complete definitions of your strategy, but, right, still not enough. Okay, and so the important thing is be as specific as possible. We want as many details as possible, okay? Because let's say you're talking about overbought, oversold. Right? So stocks may be, based on your definition, varying levels. How do you know when it's overbought enough to be worth a play? Okay? Or are you going to play all stocks that are at some kind of support, or only certain ones? Is there a certain type of support you're looking for? Right? The bottom of the base, or an uptrend that's pulling back to a previous pivot, or a V pivot versus a long, narrow base, right? What kind of support are you looking to play? Right, has to be as specific as possible, okay? And even just, it may sound simple. I play bullish stocks long, I short bearish stocks, right? So what are you using to determine, right? It sounds simple. I'm just gonna go long the thing that's moving from the bottom left of the chart to the upper right, okay? But most stocks will not do that from open to close, right? So what are you gonna use? Are you gonna use the VWAP? Are you gonna use the MA? How are you gonna determine this, right? What if something is moving sideways? Okay, what are you going to, is that just going to be neutral then? Right, these things all have to be very much defined, okay? And what makes a good pro gap? right? Because we're going to get so many pro gaps. If you use the same kind of gap definition that we use in the room, right? How do we know which one to focus on? Which ones are the ones we want to play? Okay, so what you see here is the definition of the novice gap that I have and how I rank them. Okay, so we want it to be as specific as possible. Now this could be even more specific, honestly. You could go into more in depth if you wanted to. Okay, and you're going to be seeing parts of my trading plan which don't have any charts. Okay, and because the reason was completely intentional when I created it in 2015 and probably didn't get to where I liked it and probably until 2017, okay, is that I wanted to do it completely in text. I felt like if I just took pictures of charts and put them in there and said, well, I want to play stuff that looks like that it was too much of a shortcut. And so I wanted to be, if I can explain it in words, if I can type it out and describe it, that will be evidence of me fully understanding what I'm looking to do. Okay, so everything that you see, there's no charts involved. I wanted everything to be able to be put into words as much as possible, to display to myself that I have a full understanding of it. Okay, so as much detail as possible. Okay, so what you'll hear me play, or what you'll hear me say a lot of times about the plays that come up in the room, right, is stuff like this. I think this stock looks slower, but I don't have a play for this. Okay, sometimes, you know, it looks good, or I don't have quite the right setup. Okay, it's really, really bullish, and it's a pro gap down, so I don't have a play for this. I don't have a means to enter into this short, even though maybe I think it's lower, right? Because I can't just play everything that looks higher long and everything that looks lower short. Be taking thousands and thousands of trades a day. So there has to be what I define, because I know that I have a good expectancy there, that I have an edge, right? And so that doesn't mean that you can't develop more as you go. I think that's what pushes a lot of people to just want to take plays, because they're like, well, what if it works? I'm just going to miss out. Even though I don't have a strategy for this, I don't really know how far it's supposed to go or how often this setup works. But if it works, I'll feel bad or whatever, right? So then, fine, you pass on it and you can develop the strategy that should go along with it, right? That's kind of what happened with the gap bullies and gap bearies. If you're familiar with that, we saw a lot of them that were going climactic, just accelerating after bullying or bearing the gap, right? And so we collected dozens and dozens of them to kind of compare which ones look the best, develop a strategy around that, right? And then, you know, knowing what you're going to focus on. Like I said, there are going to be lots of gaps. And of course, on it, we have thousands of stocks, more than a couple thousand that you could potentially enter into long or short, right? Why those, right? Especially at the open when things are all moving, right? Maybe, you know, this level 2 here is moving really fast, and then, you know, this chart prints a big bar and you think, oh, well, I just want to fall in because it's clearly very, very bullish, right? Is that really representative of your strategy, or are you just reacting, right? Chasing things, okay? So we want to know what we're going to focus on, and that comes from being as specific as possible in our strategies. Why are we choosing this to be bullish or to play this long? Why are we bullish on this? Why are we bearish on that? Okay. All right. Next phase, execution. Okay. So we've done all our planning. We know what we're supposed to play, what we like. Okay. What has a good edge. And now we're ready to execute our order to take the play. Okay. Some other things that I hear sometimes from coaching students is, well, I just felt like it was going higher, so I bought some, right? Because I'll ask them, what was the entry pattern here? Why here? Like, why did you choose to enter here? Why didn't you enter at the open? Why didn't you wait to see if you were going to get more information, right? Well, I just felt like it was going to go, so I didn't want to miss it, right? Or I felt like it was going to drop some more, looked like it was going to drop some more, so I shorted it at that time, right? And so, these kind of things, right, show that this trade is not completely designed. It's a pure kind of reactionary thing, okay? Well, and hopefully not too many of you are doing this. The guy on TV or this analyst said it was a good opportunity, so I just did it based on that, okay? So what do I mean by trade structure? So the entry pattern, right? If you're a pattern trader like we are in the room, right? The pattern gives you when you enter and where your stop goes. Okay? So there has to be entry pattern. Entry pattern has to match up with the strategy. Okay? So previously I showed you novice gap strategy. Okay, now we're looking at these entries would go with the pro gap, right? So these are the entries that go specifically with that, and the tiers that, based on the ranking, what entries I can play on them. Okay, so there is a process there that goes from strategy, which we talked about in the planning, now to the entry pattern, tells us when to execute. All right, and then we get a trade. Okay, and so what you don't want to be thinking when you're in this trade, especially, is why did I take it? What was I thinking? I don't remember why. Right? Maybe I just, jumped in. I wasn't really sure what I was thinking. Okay. Again, should I enter now or wait for more information? Why now? What was it that you saw now? Why did you think now was the best chance, right, to get in, that you were going to get a move now? Okay. And then how will I know to get out if the trade isn't working? That is, I think, one of the most clear signs of beginning thinking for trading. Okay, I was the same way. When I first started trading, I thought about, okay, I want to get this many shares of this stock because if it goes to my target, I'm going to make this much profit. Okay, there wasn't thinking about, okay, what happens when it starts to move down? How am I going to know when to get out? How do I know, how much, what a good kind of exit would look like? How much loss is enough? Right? It was all about, I'm going to play it and how much profit do I want? Right? But we need to think about also the risk involved, right? And the pattern also going to tell you where the stop goes. Okay, so this has to be as methodical as possible, right? So just falling in, just trying to catch a quick move, right? Now, if you're really good at scalping, you're really fast, you look for really small moves, and that's it, right? And you get out at the first sign of reversal, maybe you can trade a little bit more off of intuition, okay? And you don't need to have as strict of a structure. I don't do that. All my trades are generally intended to be in it as long as the trend is maintained. So I'm not really looking to kind of just get in, get a couple pennies, and then jump out the other way, okay? So when I'm talking about this consistent process, okay, before you place a trade, okay, if there's anything that I think that you take away from this presentation, I think this is the most important, okay, about the thought process, because this is when you almost don't, you have to think really quickly, you have to put it all together, right, so that you don't miss the trade. If you decide you're going to pass on the trade, fine, you pass on the trade because maybe one of these pieces is missing, okay, but all of these need to be there to be a complete, well-designed trade, okay? And the first one, strategy, right? We just went over in the planning. Why are you playing long? Why are you playing short? Is it because it's a pro gap? Is it because it's a novice gap, right? Why are you playing short? Why are you playing in the direction that you're choosing? Okay, now that you've decided, I'm going to play long or short, right? You have to decide when are you going to enter and when are you going to exit if it's not working. Okay? And then the very last piece, what is the target? Okay? Is the reward worth the risk? All right? So we're looking at reward to risk. You know what the defined stop is, right? And then you're saying, if you're looking for 2 to 1, is there enough there? Okay? So all of these must be in there. So you're ready to take a trade. You see something that looks good. Okay. Then if you want to have a checklist, right? I've been asked this before. What do you want to have on your checklist? This would be a good place to start with your pre-trade checklist. Is there a strategy? Is there a pattern? Is there reward to risk? Then I can take the trade. You can add more stuff to it. If you want to be even more specific, right? Is it at or near 20 MA? Is the 20 MA pointing in the same direction as my trade, right? Or is it above or below the VWAP? Any of these other kind of amplifiers that you want to have as part of your trade, right? You can add it to your checklist. But this, I think, is the bare minimum you got to have. Okay, when you come across a play, you're sizing up the play, you're figuring out if you're going to play it or not. Strategy, why am I playing it, long or short? When am I getting in? When will I know to get out if it isn't working? And is it worth playing? Okay, every single trade should do this. Consistent process. Okay, so we're not just jumping in because someone said it looks good, because I feel like it looks good, something like that. Unless, like I said, some people are naturals at this. Okay, there's especially some traders that I've known that have mentored me. I just can tell that they're naturals at it. I think what makes me a good coach is that I am not a natural. I learned very quickly, trying to figure it out on my own in the first couple months, I cannot make this work consistently. And a lot of these kind of like pitfalls of just kind of reacting to things, not having structure, jumping in early, right? I struggled through all of this. Okay. And so because of that, right, this part keeps me from being able to progress. Okay. So without like a talent for trading or a natural intuition, right, I can still build some consistency, make adjustments, and make improvements. Okay, so next on to management, which I think is the trickiest aspect, okay, about trading in general. I think probably the trickiest, okay? And it's because once we're in a trade, we become super focused. Now we become detail-oriented, right? Like before, when we were thinking, well, what are we going to play? What kind of things are we going to play long? What kind of things are we going to play short? We're very broad in general initially. Well, I just want to be able to play whatever works. So now I'm just trying to have a broad enough umbrella that catches all the plays that would work, right? And then once we get in a play, now we're super focused. We're thinking, well, this should do this. If this candle doesn't do this, it's not acting right, right? Or if it breaks the 20 MA and then it's not going to work, right? We become super focused. We're staring at the P&L. Every dollar matters, right? And so that is the tricky part about the management, right? Now we get this tunnel vision, and we're so focused on the play. We're so focused on today's P&L, right? And so there's a lot of that keeps you from looking at the bigger picture, which is we want to be consistent and then make adjustments if there's more to be had or if you need to be taking different types of plays. Okay, so what I'll kind of hear a lot of times, well, I struggled yesterday, so today I really have to make up for it. So I got to be more aggressive, or I got to increase my size because yesterday was bad. I got to make up for it. Okay, or I was having kind of an unsure morning, and I finally got a play that had a little bit of profit, and I took it. And then I was really disappointed when I came back, and it was at my target, right? That I was actually looking for. I just got impatient, or something like that. Okay, and then I'll just kill this play break even because I'd rather not lose money. I'd see that a lot, right? And then when the play is at target, then I start to hear, oh, it's so painful to look at. I shouldn't have killed it or whatever. Okay. All right. So be consistent. Avoid tunnel vision. Okay. So if you're thinking, I'm in this trade, what should I do? Should I get out? Should I not get out? Should I hold? What should I do? All the time, then your goal is not really trading consistently. You're basically doing live and die on every trade and hoping that whatever decision you make is the right thing. Okay? And so what I hear from a lot of people right? Is how come I always hold the trades that fail and kill my would-be winners break even? Okay, how come I'm always doing the wrong thing? If you're consistent, then that's not possible, right? If you're doing the same thing, and then the data that you collect based on your management actually means something, right? So that way you can actually make an adjustment. Okay, you see here, this is my actual trade management. Anybody in coaching, anybody in the room knows my trade management. Okay, I've sent it to you guys in emails. I know you guys have taken pictures when it's been on the screen, right? Everybody knows what it is. It's very simple. So that's my goal. I just want to do that consistently. If adjustments need to be made, right, then I can start to change it. Now, I'll be honest with you, from a month-to-month basis, the trade management is executed about 75 to sometimes above 80, if I'm maybe more disciplined that month. Okay? And so, but there have been times before I really made it my goal to be consistent where it dipped as low as 40% early on when I said, this is my management, this is what I'm going to do. I couldn't even do it on a majority of them. And so that really has to be your goal, right? And so that will mean sometimes you're going to take a trade, and because your management, you could have got break even and you didn't. But that also, there are going to be other times where you wanted to get out of the trade, right? And your management is going to make you multiple R's, okay? So this is the kind of thing that you should be saying, right? Not that I struggled yesterday, so today I'm going to be super aggressive and make up for it, right? Or, or what you should be saying is, I'm going to let this play out till it gets to target. And you guys hear it from me all the time in the room, right? Where we have a play, it's working a little bit, and then it starts to come back in, but it didn't get to target. What do I say? There's nothing I can do here. I can either wait for an hourly trail if it actually did get to a target one, or if it's going to stop, it's going to stop. And sometimes it is a challenge, even for me, to stick with it. Especially, I'm in a trade. I know there are other people in the room taking it. I don't want to lose money. I don't want anyone else to lose money, right? But I have to stick with my management. Sometimes I'll even have trades, right, where I'm saying, there's nothing I'm going to do. I'm going to let it play out. People in the room are telling me, I don't feel like it's going to go back up, or I don't feel like it's going to work. And even in those situations, I'm going to trade my management, because what am I going to do when that play actually ends up going to the big target? Say, oh, why did you tell me that? Why did you, tell me otherwise? Why did you make me doubt it? Right? No, the consistency has to come from me, right? And if you guys in the room, you've seen this happen, right? And so also, if you kind of are in that really short-term focus, you're managing yourself, or maybe you're just having a day where you don't want to trade, then don't trade. If you're not ready to commit to managing the trade as per your plan, then take the day off or take the morning off, right? Whatever you choose to do, okay? So you have that freedom, right? But the goal is to be consistent, because what's going to happen if you don't feel like really taking a play, you don't feel like I want to lose any money today, you're going to get in the play. Maybe it works a little bit, makes a little bit of profit. You're like, I'm going to trade it like I should, wait till it gets to target. As soon as it comes to break even or down a little bit, you're going to say, oh, never mind, I knew I shouldn't have traded today, and get out. So you're going to mismanage it anyway. Whether that ends up working really well and you just got yourself out of a good trade because you couldn't stick with it, or whatever, right? You're already setting yourself up to not be consistent. Okay, so if you're just not feeling, you can't commit to the trade, your goal, your thought process is, I don't want to lose money, as opposed to, I'm going to trade my plan, stick to the management, okay? Then just take the day off, come back tomorrow, right? See you when you're ready, okay? And then, the other thing that you can always do is make adjustments, right? I've noticed my plays are frequently going beyond my target, so I should change my management to allow for a runner. Or right now, plays are not going as far. I'm only going to look for a target one. Okay, now that's based on your review, right? If you look at a lot of plays, your last 20, 50, whatever plays, right? Last 2 months, however you want to look at it, you say, I'm going to make an adjustment to be able to have a higher capture percentage, right, then you can always do that. All right. But it's hard to think long term like that, right? That I'm going to continue to do this management or take these or trade this way, and then I'm going to make a future adjustment, because everybody wants to make as much money as they could on each and every trade on each and every day. Right? And so it's that short-term focus that prevents you from achieving consistency. Right? Because you're just focused, and there isn't going to be a management that is going to get you the most out of every single trade on every single day. Right? So that is the thing we have to accept. And so then the goal becomes consistency, take the results that you get, see if adjustments need to be made, and then go from there, right? Even though we want to stick to a plan, right? When we have the data to back it up, where we need to make a change, okay, we have to be dynamic just like the market. All right. Okay, so just to summarize everything here, right? I think we looked at a lot of kind of different, just from discussing with other traders, the conversations we have each and every day in the room, right? The thought process. And sometimes maybe you hear me say things, you hear me say them so many times that, you either take it for granted, you don't know kind of where it's coming from, right? Why am I saying that? Why am I taking this approach, right? And so this is to kind of help you understand that. All right. And so when it comes to preparation, planning, so what I'm talking about in general is your trade plan, be as specific and as detailed as possible. Okay. And when I went over the trade plan on Friday, I already got an email saying, can you send me your trade plan? And I have to stress that it's not about the plan itself. Because even if you take my plan and I give it to every single person in the room, we're still not going to end up with the same trades. That I am sure of. Okay, it's about the process of putting it together. Okay, it's about the process of saying, this is what is good enough for me to trade. These are the qualities I want, right? Defining your trading plan, essentially your business plan for your trading. Okay, so the process is really, really important. I'm happy to help people to kind of go over them. We've done it a lot in coaching, going through the trading plan. And a lot of times that's what I end up saying. Be specific. Be detailed. Like if I run into someone, they say, well, I'm going to take it easy at lunch. Right? And I say, well, why is that? Is that because you've taken a lot of trades at lunch that show that they don't work? Or does that mean you're only going to take the best trades at lunch? What does take it easy at lunch really mean? Okay, so be as specific and detailed as possible. Okay? In your execution, be methodical, step by step. Strategy, why am I playing long or short? How do I know when I'm supposed to get in and when I should exit if it's not working? What is my target? Is the reward to risk worth playing? Those should all happen, right? That thought process before you hit the button to enter the trade, to enter the position. Okay? Step by step, right? Put it all together, and then you have a trade. Okay? And then in the management, be consistent, but willing to adjust. Okay? Not saying pick a management and just go down fighting or go down with the ship, right? If it's a bad management, right? Pick a management, try to be consistent, and then make adjustments. Okay? You could copy mine. Plenty of people have. I don't mind. Okay? If you want to just kind of follow along on the room, try to develop your own, find what you're comfortable with. Okay? That's fine too. Okay? Now, because some people are more willing to look for bigger targets. But what does that mean? You're probably going to take more losses than someone looking for smaller targets, right? And so if you're looking for smaller targets, which I generally do look for some smaller targets. Now, 1R for me is the minimum, right? But I know other traders who look for 4R, all or nothing. And then they kind of trail on pivots, right? And so you're going to get nice big plays. You're also going to sometimes get some plays that work for 1 or 2 Rs and then come all the way back in. Now, if you cannot do that consistently, right? If you take a couple losses and then as soon as you take a couple losses, all you're thinking about is not losing money or whatever, you can't do it, then you can't do it. That management is not for you, right? For this year, actually, 4R all or nothing is the best management for me because I track 1 through 5R all or nothing for all my trades, which means if I would be willing to hold it, the whole thing to 4R, right, that would actually make me the most money. The problem with that is it will also cause my win rate to go down, right? And if it's 2 trades that don't work or 3 trades in a row that don't work and I can't take that 4th trade that was going to go 4Rs, okay, then I can't execute that management. Okay? So it has to be a management that works for you, that you can do consistently. So that should be the priority. Then from there you can make adjustments on how to increase profits. Okay? All right. So there is kind of one section and one kind of process phase of this that is left out. That is the review. Okay? Because the review is going to inform your adjustments. Okay? I plan to do a video strictly on looking at trade tracking results and what we take from them. Okay? So I am going to be using actual tracking sheets from coaching clients. I've already reached out to some of them to make sure it's fine with them. Of course, they'll be completely anonymous, no identification whatsoever. But I want to just take a look at some of the things that we learned from looking at tracking sheets, okay, and how we applied it to their trading, okay. But for this, I wanted to kind of clarify, just in a very general sense, no charts, no real discussion of actual strategy pattern, but just the thought process, okay? Because I think a lot of traders, no matter what your methodology is, can relate to this kind of struggle, right? To be taking the right approach, knowing when you should be as detail-oriented as possible, right? Versus also knowing when you shouldn't have tunnel vision, when you shouldn't be kind of obsessed with the chart and then, having it dictate your actions. Okay. All right. So that's going to do it for this presentation. All right. Hope there's something you can take away from it. I think people really liked going through the trading plan on Friday. So I just wanted to kind of take that and kind of what people learned from that and apply it to an even more broader sense. Okay. To kind of get you thinking also, how can I be thinking more about consistency in my day-to-day trading? All right. Thanks a lot and best luck in your trading.